Once again, good morning and welcome to the New Hampshire Insurance Department's annual hearing on premiums and the insurance market. The hearing is an opportunity to present findings on the insurance marketplace and to create a public forum for related issues. Let me start with a little bit of housekeeping. As you could tell when you came in by the registration desk, we don't intend to let anybody go hungry today. There's plenty of breakfast material, and as I reminded one of the insurance department folks, some people do eat healthy. I was up there getting a muffin, and Jenny was getting an apple. I said, "You don't watch me eat this muffin." Anyway, there's plenty of food out there. There's coffee, and light snacks are available just outside the room. At 11:45, we're going to break for lunch, and there are going to be a range of options downstairs and in the front lobby. If you need more coffee or water at any time, feel free to slip out and get your coffee or water. The restrooms are just about 50 feet down the hall that way, in the opposite direction of the stairs. My left, your right. Today's event is being recorded and is also being seen via the internet in live stream. Let me start by recognizing some of the staff members from the department, and let me ask them to introduce themselves. I'll start with Alex.
Tyler Brandon, I'm the department's health policy analyst.
Hi, Denny Patterson, I'm the health policy legal counsel.
Hi, I'm Ariana Spell, I'm the outreach coordinator.
Good morning, Michael Wilkie, I'm the Director for Life, Accident, and Health.
Martha McLeod, project manager. Daniel Bear, communications director.
And Maureen is here somewhere. Would you introduce yourself, Maureen?
Well, when people see me, I was different.
No. Oh, so they all know you by now? And special thanks to those that, and all the folks that just introduced themselves, had a hand in putting things together. Tyler was the main culprit at putting it all together. So, but I do think we've got a great agenda today, and I do think that it's going to be a really good opportunity for us to dig more deeply into the some of the reasons for the healthcare costs continuing to rise, which for that matter is the primary reason that health insurance premiums rise. Next, I'd like to recognize the staff from Gorman Actuarial. Jenn Smagula. Jenn is there. And congratulations to Jenn. She's going to be a mom again next month. Don Gorman is here. And is Gabby here? Gabi? Outside. Okay. Okay. Following the agenda, which isn't something I always do, by the way. The department, the insurance department, has released a preliminary report that was developed from data received by the department, and a final report is going to be released in early December. The reports can be obtained from our website. In addition to an overview of cost drivers and health insurance premiums, we focused on a topic that's important to the commercially insured population, pharmacy costs. That's going to be a lot of what we end up talking about today. Last year, New Hampshire spent more than $1 billion, that's with a B, on prescription drugs, and averaged more than 15 prescriptions per person. Clearly, it's something that we need to pay attention to. I don't know, that number surprised me. I'm not sure if I should have been surprised, but it did. We're going to begin with a presentation by Gorman Actuarial on the health insurance premiums and our insurance market. The rest of the day is going to be dedicated to experts on drug information, value, and pricing. There's going to be a public comment period at the conclusion of the Gorman presentation. Before the public comment period, Jenn will ask you for questions related to the presentation that she's going to be giving this morning. After that, we'll have the public comment period. It's a public hearing, and we want to hear public comments relative to the topics that we're going to be talking about today. Then we take a 15-minute break, and we get reseated at 10:25. Without further ado, let me invite Jenn to the podium.
So as the commissioner said, I'm Jenn Smagula. I'm a healthcare actuary working with Gorman Actuarial, and I'm joined here today with Don Gorman and Gabi Lockhart. And I'm going to take you through our presentation on the preliminary findings of New Hampshire's 2015 healthcare cost drivers. So the goal of this report is to examine premium rates and the factors contributing to changes in those rates. And this year's focus is on 2015. So to start off with some key findings, overall premium trends remain low in the small group and large group markets. Consumers continue to shift towards products with higher cost sharing in the large group markets, but there was actually minimal benefit buy down in the small group market this year. Individual market experienced dramatic shifts, dramatic changes in 2015, some of which continue into 2015, and there's more changes expected in 16 and 17. Overall, allowed claims trends continue to be driven by unit cost increases rather than utilization. Pharmacy total costs increased significantly at 8.7% compared to the prior year and now represent about 19% of total medical costs. And membership and risk contracts continue to increase, driven by upside-only risk arrangements. So to start off, this slide gives an overview on where New Hampshire residents received their health insurance in 2015 based on information collected from the American Community Survey. The number of uninsured residents or residents without health insurance has decreased from 120,000 in 2014 to 83,000 in 2015. So this translates to an uninsured rate of 6% in 2015, which is shown as that dark purple piece of the pie. And per information through the Kaiser Family Foundation, we know that of the remaining uninsured, approximately half are eligible for Medicaid or eligible for federal premium subsidies on the exchange. The number of residents receiving health insurance through the commercial private markets increased from 820,000 in 2014 to 831,000 in 2015. So this includes residents who receive health insurance through their employer, which is the large blue piece of the pie at 57%, and also those who purchase coverage on their own, which is the smaller, the teal-colored piece of the pie at 6%. And the number of residents receiving coverage through Medicaid has also increased by approximately 21,000 members from 2014 to 2015. So our report and findings focus on the commercial insurance market in New Hampshire, and by that we mean those, by those who receive coverage through their employer or purchase coverage on their own. So this slide gives a picture of the membership distribution by insurer in the commercial, fully insured, and self-insured markets. So there are three insurers that continue to dominate the market in 2015. So that's Anthem, which includes Matthew Thornton Health Plan, Harvard Pilgrim, and Cigna. There are two new entrants in 2015, Minuteman Health and Community Health Options, each with members primarily in the individual market. And so while this report focuses on 2015 and the changes that occurred in 2015 compared to the prior year. We did collect data such as membership into 2016 when available and have some of that information in subsequent slides. So the greens, the difference in the green didn't show up so great here, but this slide is meant to give a picture of the insurers entering and exiting the individual market and the individual health insurance exchange marketplace, or what we're referring to as the exchange. So in 2014, Matthew Thornton was the only insurer on the exchange, so it's in that slightly less dark green color in 2014. Now this compares to 2015, where there are 5 insurers on the exchange. So in addition to Matthew Thornton, there's Assurant Time, Harvard Pilgrim, Minuteman, and Community Health Options. So increased competition can lead to downward pressure on price, which is generally a positive thing for consumers. And due to this increased competition, the market experienced significant membership shifts among the insurers in 2015, as many insurers introduced new products with different provider networks. And all of these changes combined resulted in fluctuations when examining premium and claim levels and trends in 2015 compared to 2014. Now, this fluctuation will continue into 2016 and 2017, where there's more changes and shifts that will be happening among insurers. The small group market has not experienced quite as much fluctuation, but there'll still be some impact with new insurers entering the market, including Tufts Health Plan, which entered the market in 2016. So this slide now drills down further and focuses on just the fully insured market within the commercial market and how that membership has changed over time. So by fully insured, we mean that the employer, group, or the individual pays the premium to a health insurer, and the insurer is responsible for claims. Now, this is in contrast to a self-insured arrangement where the insurer administers the plan, but it's ultimately the employer who's responsible for paying the claims. Within the commercial markets, our focus is primarily on this fully insured market segment. So the overall fully insured market in New Hampshire has grown from around 228,000 members in December 14 to 231,000 members in December 15, and growing further into April 2016 at 275,000 members. The majority of the growth that we see into April 2016 is due to the introduction of the New Hampshire Premium Assistance Program. Now, New Hampshire converted its Medicaid expansion program into this Premium Assistance Program on January 1st, 2016. And as of that date, those members are now part of the commercial individual market and will be rated as part of the single risk pool requirements under the ACA. Individuals eligible for the Premium Assistance Program generally include those age 19 to 64 who do not fall into other Medicaid eligibility categories with incomes below or up to 138% of the federal poverty level. As of April 2016, there are about 40,000 members in the New Hampshire Premium Assistance Program, which represent about 14% of the total fully insured market, so that light blue piece of the pie. Now, there has also been continued growth in the individual exchange market outside of the New Hampshire Premium Assistance Program, where the number of members grew from about 28,000 in December 14 to 49,000 in April 2016, and those members are represented by the dark blue pieces of the pie. So with the small group and large group markets, we have actually seen those shrink slightly in terms of the absolute number of members. So the small group market over this time period shrunk by about 6,000 members, and the large group shrunk by about 2,000. And you can also see they've gotten smaller as a percentage of the total insured market. So the small group market, which is shown in the red, represented about 33% of members in December 14, and that shrunk or decreased down to 25% in April 16. And then similarly on the large group side, which is shown in green, they represented about 44% in December 14, down to 36% as of April 2016. So again, in April 2016, the individual market, including the Premium Assistance Program, now represents 38% of the total insured market, so the sum of those three pieces of the blue pie. And it's actually, so that the individual market alone is now larger than the small group market and also larger than the large group market. So this slide further demonstrates the diversity of the individual market by showing a breakdown beyond just the exchange and non-exchange populations. So in addition to the impact of the different insurers and new insurers coming into New Hampshire, we also have the fact that there's all these different subpopulations within the individual market that each have different risk characteristics and different product offerings. So it makes it a very complex market to analyze. So for example, on the left-hand side of this slide, we show the non-exchange members. So these are folks who purchase health insurance outside of the exchange, and they represent about 20% of the individual market. Now, within the non-exchange population, about half is either grandfathered or transitional, and the other half is non-grandfathered. So the grandfathered or transitional populations are not subject to all the same rating requirements under the ACA. On the right-hand side of the chart, we show the exchange population, the 89,000 members. So again, as we discussed, about 40,000 of those are coming through the Premium Assistance Program, which is that Medicaid expansion population. The remaining 49,000 members on the exchange are outside of the Medicaid program, but some of them are still receiving other kinds of subsidies. So 17,000 of those are receiving cost-sharing reduction subsidies and federal premium subsidies. 14,000 are not receiving cost-sharing subsidies but are still getting federal premium subsidies. And the remaining 18,000 are not getting any type of premium assistance. So this slide now moves on to look at what premium levels and trends looked like in 2015. So while in 2015 premium levels in the small group and large group insured markets did increase compared to 14, the average premium increases are fairly small. The small group market premium trend was 1.9% in 2015, and the large group market premium trend was 0.9%. So combined, this generates a group or small group, large group combined trend of 1.4% in 2015, which is slightly lower than what we saw in 2014, where the combined trend was 2.8. The premium per member per month shown here include both the employer and the employee portion of the premium in the group markets. National data shows premium trends in the group markets between 3 and 4%. So these trends are in line with that, if not slightly lower than what we're seeing nationally. Now, when looking at the individual market, which is shown on the left-hand part of this slide, 2014, again, experienced significant changes in the average premium per member per month as a result of the introduction of the Affordable Care Act. So going from the $296 in purple up to the $366 in red. And this was driven by several factors. Higher morbidity and higher average age was expected as a result of the influx of new members, many of whom came from the state's high-risk pool. these increases were partially offset by the introduction of some new products, including a new limited network product offering that occurred on and off exchange. Therefore, in 2014, the average premium increases shown here, the 23.6%, could have been even greater if not for these lower costing new limited network products. Oops. Now, in 2015, the overall premium levels remained nearly flat, so the 368 compared to the 366. So as discussed previously, the individual market had 3 new entrants in 15, Harvard Pilgrim, Minuteman, and the Community Health Options Plan. So these new entrants, in addition to the existing exchange insurer, which was Matthew Thornton, and the existing non-exchange insurers, which was primarily Anthem, they all offer different products with different networks at varying rate levels. So a combination of the new entrants, members shifting among insurers, continued expansion of the individual markets, and different networks at different rate levels all contributed to several offsetting factors that ultimately resulted in a nearly flat premium trend in 2015. Now, 2 other notes to make here. The premiums shown here do not reflect federal premium subsidies for qualifying low-income individuals, which can be significant depending on income level, and the next slide will give an example of that. And secondly, these trends are unadjusted, meaning they're shown using data submitted directly from the insurers, and they have not been adjusted to reflect the fact that an employer or an individual may have purchased a plan with higher cost sharing in order to lower premiums, a process that we refer to as benefit buy-down. So this slide illustrates the impact of federal premium subsidies. Again, the data shown on the previous slide is based on premiums prior to the impact of federal premium subsidies. Premium subsidies are generally available on a sliding scale basis to individuals and families with incomes between 100 and 400% of the federal poverty level. In this simplified example, using data from February 2015, we have assumed exchange members are in the middle of the income bracket, and this reflects premiums for a single policyholder in the second lowest costing silver plan. So this data from 2015 shows that a single policyholder in the 100 to 138% FPL range, so on the left, will pay no more than $23 per subscriber per month, versus a single policyholder in the 300 to 400% FPL level, so over on the right, will pay no more than $328 per month. Now, as of March 2016, approximately 31,000 members on the exchange, which translates to about 63% of the members on the exchange, received a federal premium subsidy. So benefit buy-down is the process of selecting a plan with reduced benefits or higher member cost sharing as a way to mitigate premium increases. So these next 2 slides look at the membership distribution for one key component of cost sharing, the deductible. The information in this slide is for the small group market and shows the shift towards plans with higher deductibles over the past 4 years. So for example, between the 2 time periods shown in this chart, 2012 to 2015, the percentage of members with a deductible of $3,000 to $5,000 increased from 40% up to 48%, so the purple part of the pie. And when looking at deductibles $5,000 or greater, we see the increase go from 8% in the teal colored up to 20% in 2015. So when looking over these, taking this long-term view of looking at how deductibles have changed over time, we do see a significant shift towards higher and higher deductible levels. But it is worth noting when we just looked at 2015 compared to the prior year, 2014, there was a minimal shift in just those 2 years. The overall average deductible in the small group market in 2014 was around $3,082 compared to the average deductible in 2015, which was $3,149, which is only about a 2% increase, so fairly small. So this is probably driven in part by the low average rate increases that we're seeing in the small group market in 2015, which led employers to not feel like they had to buy down as much to mitigate premium increases because the rate increases themselves were fairly low. And while not shown here, we do see similar trends in the large group market with two differences to note. So while the large group markets have also been shifting towards higher and higher deductibles and more benefit buy down over the past couple years, the average deductible levels in the large group market are still below what we see in the small group market. And secondly, unlike the small group market, there was a shift towards higher deductibles in the most recent time periods, 2014 to 2015, where in the large group market, the average deductibles increased 14% versus, again, that much smaller increase we saw in the small group market from 14 to 15 of 2%. So this slide shows similar information as the previous slide, but now it's for the individual market. Overall deductible levels in the individual market in 2014 are very different than what we were used to seeing in prior years. And this is due to the introduction of the ACA's Federal Cost Sharing Reduction Subsidies, or CSRs, for qualifying low-income individuals who are under 250% of the federal poverty level. These cost-sharing reduction subsidies allow individuals to have lower co-pays, deductibles, and coinsurance while still paying a fairly low premium. So the data in this chart reflects the entire individual market. And you can see here that we see a decrease when we go from the average deductible in 2012 to 2015. The 2015 average deductible is about 13% less than it was several years ago in 2012. And the other thing to note is that the 2015 deductible, average deductible in the individual market is now actually less than what it is when you look back at the small group market. Again, this is all driven by the introduction of these cost-sharing reduction subsidies and those members coming into the market in 2014. In 2015, there are approximately 17,000 members receiving cost-sharing reduction subsidies. So this represents 40% of the exchange population and 29% of the total individual market. The average deductible for these CSR members is around $879, so significantly lower than this total average we see here. So using information from the insurers on cost-sharing changes and changes in actuarial value of plan designs, we can estimate the impact of benefit buy-down. So this chart shows the unadjusted premium trends from a previous slide, along with the estimated impact of benefit buy-down, to estimate what the premium trends would have looked like in the absence of any plan design changes. So for example, in the large group market, if they had not changed their plan designs from 2014 to 2015, the large group market would have experienced premium trends in the range of 2 to 4%. But because there was buy down going on, there were people moving to higher deductible and other higher cost sharing plans, the resulting unadjusted premium trend is 0.9%. Now, in the small group market, where we noted there really wasn't a lot of benefit buy-down that happened in 2015, the benefit adjusted premium trend is not really that much higher than the unadjusted trend. So that the 2 to 3% range isn't really that much higher than the actual premium trend of 1.9%. Now, in the overall fully insured group market, the benefit adjusted premium trend is estimated to be between 2 and 4%, which is lower than what we saw last year, where we saw the benefit adjusted premium trend of 4 to 7%. So we've been talking about premium trend, and now this slide shows the major components of premium for each fully insured market segment in New Hampshire. So a couple notes on this before going into the details. So this information is shown prior to any federal MLR rebate payments. The MLR rebate payments have not yet been made public, so they're not shown here. We haven't reflected them yet. And now, while this information is based on the same underlying data used in the federal MLR rebate calculation, the loss ratios shown here are not the same as the loss ratios that are actually used in that calculation. And the total premiums here that are used as the basis for the loss ratios do reflect risk adjustment, reinsurance, and risk corridor payments and receivables that were made in 2015. So the percentage of premium for medical and pharmacy claims is 80% in the individual market, 77% in the small group market, and 80% in the large group market. Now, in the group markets, the percentage of claims for medical and pharmacy services is very consistent with what we saw last year, while there are significant changes in the individual market. So in the individual market, the percentage of premium used towards medical and pharmacy claims was 72% in 2014, increasing to what we see here to 80% in 2015. Admin expenses and fees as a percentage of premium also increased significantly from 9% in 2014 to the 18% shown here in 2015. So the end result is a decrease in the profit margin, decreasing from a positive 4% last year to this negative 9% shown in red in 2015. Now, the dramatic shift in the results are primarily driven by the new market entrants into this individual market, so namely Minuteman and Community Health Options, who generally experience higher administrative per member per month costs and much higher claims to premium ratios than their competitors. And as will be discussed in the next couple slides, Minuteman in particular was a large payer in the individual market risk adjustment program, also significantly impacting their financial results. Now, in each market segment, about 2 to 3% of premiums are used to pay for ACA-related fees, which is shown in maroon, including the ACA health insurance tax, the PCORI fee, and the transitional reinsurance fees. The federal reinsurance program is a 3-year program that started in 2014 and ends in 2016. This program provides payments to plans in the individual market who enroll high-cost individuals. It is funded through assessments to all health insurers, both fully insured and self-insured plans. In 2014, New Hampshire insurers in the individual market received $21.8 million in total reinsurance payments, which is fairly consistent with what was received in 2015 at $21.5 million. The largest payment in 2015 was to the Matthew Thornton Health Plan and represents about 7% of their premiums in 2015. So in other words, their premiums to our consumers were approximately 7% lower than they would have been if due to the expectation of these payments. Community Health Options and Minuteman received about 12% and 11% respectively of their premium and federal reinsurance payments. So another of the 3 R's, or what's known as the 3 R's, is the risk adjustment program, which redistributes funds from plans with lower risk or healthier enrollees to plans with higher risk or sicker enrollees. This program is a permanent program that started in 2014, and it's revenue neutral within the New Hampshire individual market and within the New Hampshire small group market. So this slide shows the results from the individual market. So as stated previously, Minuteman was the largest payer in the individual market in 2015 at $10.5 million, which means they enrolled lower than average risk enrollees. Alternatively, Time Insurance Company and Community Health Options enrolled higher risk enrollees on average and received money through the risk adjustment program. So when comparing results from 2014 to 2015, the impact of the additional market participants in 2015 is evident, where in 2014, approximately $5.3 million exchanged hands or was redistributed among insurers, versus more than double that amount was exchanged hands among the insurers. So about $11.7 million was exchanged in 2015. And this slide now shows the results of the risk adjustment program for the small group market. So compared to the individual market, a smaller total amount is redistributed among insurers. So in 2015, about $4.7 million exchanged hands among insurers versus the 11.7 we saw in the individual market. Community Health Options was the largest payer in the small group market at $3.6 million, which means they enrolled lower risk members compared to the average. And alternatively, Harvard Pilgrim Insurance Company and Matthew Thornton enrolled higher than average risk populations and received money through the risk adjustment program. So as we saw in prior slides, medical and pharmacy claims are the largest component of health insurance premiums, comprising about 80% of total premium. This slide now shows the overall allowed per member per month annual trends by market segment for the past 3 years. Observed allowed claims per member per month trends in the overall fully insured market came in at 3.7% in 2015, so over on the right in red. And this represents an increase to what we saw in the prior year at 2.5%. When looking at the information by market segment, the large group market trends in 2015 have decreased very slightly from the 2.1 to the 1.9, while the small group market trends saw a fairly big jump from the negative 0.3% to the positive 3.4. The combined small group and large group trend in 2015 came in at 2.5%. Now, when we look at the individual market, which is shown on the left, in 2014, that 15.7% trend was again driven by the dramatic changes that occurred in the individual market in 2014 as a result of the introduction of the ACA. In 2015, the individual market trend has come down to 9.4%, but it's still higher than what we're seeing in other market segments. So this chart now takes the combined 2.5% small group and large group allowed per member per month trend, which is on the left-hand side, and it breaks it into 2 components, so utilization and then unit cost and mix. So utilization is the number of services provided. So for example, the number of admissions at a hospital or the number of prescriptions. Unit cost and mix trends are a combination of the change in the actual unit price of a service, and then that's combined with the mix component, which is changes due to mix of services or mix of providers. So we know the mix portion of the unit cost and mix trends is around 0 to 1% in 2015. Therefore, it's really the unit cost portion of the trend that continues to be the main driver of overall trend increases. Medical services utilization does continue to decline each year, so there's still that negative trend, but as you can see, it's not as negative as it has been, so it is coming up. So this slide now examines allowed claims per member, per month trends, but by service category. And again, this is for the combined small group and large group market. Inpatient facility trends are negative, while pharmacy and other medical services are positive and increasing. The inpatient facility category trend is driven by both decreasing utilization and decreasing unit cost and mix trends. And some of the drivers noted by insurers included lower inpatient rehab and maternity services, along with shifts in utilization to more outpatient services. Now, when examining the pharmacy trends, the pharmacy utilization portion of this 8.7 is actually flat or 0%. So that 8.7% is really solely driven by changes in unit cost and mix. And some of the items noted by insurers driving that number are things like less savings due to brand to generic conversions, along with new and costly specialty drugs. And although on the right-hand side, this other category is fairly small, it only represents about 6% of total claims. As you can see, this category did experience a large increase in trend. And one of the drivers noted is prescription drugs covered under the medical benefit or an injectable that's administered by a physician. And lastly, one thing to point out, in each of these service categories, when you just look at the utilization piece of trend, it continues to be either flat or negative. So as we saw on the previous slide, pharmacy is one of the key drivers of overall claims trend. So this table summarizes some key pharmacy statistics using small group and large group fully insured data from the New Hampshire's All Payers Claims Database, which is also known as the New Hampshire Comprehensive Healthcare Information System, or New Hampshire CHIS. Pharmacy spending is typically segregated into several buckets, including generics and brands. In addition, we further split out the data into over-the-counter drugs, which generally include items like diabetic supplies, which are covered by the insurer, and also high-cost brands, which here we've defined as the top 50 drugs by total spend. So the high-cost brand drugs can also generally be referred to as specialty drugs, given their high cost and their sometimes special care needed when administering. So most insurers would include a much broader list of drugs in their specialty category, but given that the definition of specialty can vary from one insurer to another, for our purposes here, we've just chosen to define it as the top 50 drugs by spend. So these high-cost brand drugs, as you can see, make up a very small number of total prescriptions. So here it's less than 1%, that 0.1%. But because of their high average cost per script, so over $17,000, they make up a much larger portion of total spend at 9%. So some of the most common high-cost drugs in New Hampshire in 2015 were drugs used to treat hepatitis C, chemotherapy drugs, and drugs used to treat cystic fibrosis. So it's also worth noting that given the cost sharing of plan designs and the high cost of these drugs, 99% of the costs for these drugs are paid by the insurer, so only a very small portion is paid by the member. Now, on the other hand, generic drugs comprise a much larger portion of total prescriptions, so that 83.9%. They cost on average about $32 and comprise approximately 28% of total pharmacy spending. Now, in the case of generics, the insurer is responsible, or the insurer ends up paying about 71% of the cost, while the member will end up paying around 29% of the difference, so in the form of co-pays or deductibles. So we know from information received through insurers and looking at national trends, it is typically the high-costing drugs that are driving increases in overall health spending, in overall pharmacy spending. So it'll be useful to track this information going forward to better understand which categories and which drugs are driving claims and costs in New Hampshire. So the trend information from the past couple slides are based on actual observed data. Because health insurance premiums are established well in advance of their effective dates, insurers are required to develop pricing trends or projections in order to project future healthcare costs. So pricing trends are based on a combination of many factors, including things like looking back at historical experience, looking forward and expecting impact of new drugs and new technologies, and then trying to estimate the price of those new drugs and new technologies. So this chart shows the average pharmacy pricing or projected trend estimated by insurers in the New Hampshire fully insured market over the past several years. So as you can see, pharmacy pricing trends have generally been increasing over the past several years, from around 9 to 10% where they were in 2012 and 2013, up to 14 to 15% where they are now in 16 and 17. So this is during a time when, while pharmacy pricing trends are increasing, medical pricing trends are decreasing. So thus further demonstrating the continued impact of increasing pharmacy costs on overall claims and premium. Now, these pricing trends are consistent with what we've seen in other states also. So while pharmacy trends are a key trend driver, we also know that inpatient and outpatient hospital spending comprises of also a very large portion of medical costs, so about 41%. Now, this chart shows overall hospital unit cost trends in 2013 through 2016. So you can see from 13 to 15, the unit cost trends have been fairly stable at around 3%, and they've decreased in the most recent year down to 2.3%. So, and as a point of reference, the Northeast Medical Consumer Price Index as of December 15 was 2.2%, and the Northeast Total Consumer Price Index was 0.5% as of that same date. So these unit cost increases are fairly close to medical CPI, but they are much higher than total CPI. So one type of product innovation in New Hampshire we've been tracking are these limited network products. They also can be referred to as select or narrow network products. And the idea is that by not contracting with all providers in a region or not including all providers in a region, the insurer is able to negotiate more favorable prices in return to offering greater volume to those hospitals included in the network. In 2014, there were 2 insurers offering limited network products in New Hampshire, Anthem Matthew Thornton and Harvard Pilgrim. In 2015, Harvard Pilgrim expanded its limited network product offerings and started selling them on the exchange. In addition, Minuteman Health started offering its own limited network product on the exchange in 2015. So the table in this slide shows the number of hospitals and by insurer network on the exchange in 2017. So there's generally a trade-off between the size of the network and the premium savings generated for customers, where the larger the network or the more hospitals included, the lower the premium savings compared to a product that includes more hospitals or has a broader network. So of the insurers with both a standard or both a broad and a limited network, the data show that the hospital unit prices in the limited network are anywhere on average from 20 to 40% lower than what they would have been in a broad network. The overall presence of these products has increased over the past couple years. So it was 17% as of December 14, growing to 19% as of December 15, and growing further into April 16 at 25%. So this slide is related to provider payment reform and tracks the percentage of commercial members in risk contracts. The aim of provider payment reform efforts is to better align financial incentives between insurers and providers, to reduce unnecessary utilization, to improve the overall quality of care, with the ultimate goal of reducing costs to the healthcare system. The blue bar in these charts show the percentage of members with providers in upside-only risk contracts. So for example, a contract where the provider can only benefit or receive money from the arrangement by meeting a certain set of metrics. So for example, a set of quality metrics. The red bar here shows the percentage of providers in contracts with both upside and downside risk or full risk-sharing arrangements. So for example, this might be a capitation arrangement with risk sharing, where the provider will share any gains or losses with the insurer. Now, the growth in risk contracting has really occurred in this upside-only segment, the blue portion of the bar. So where in December 11, we saw about 2% of members in these types of arrangements, growing to 39% as of December 15. And there's really been minimal growth in the upside and downside risk contracts, where the membership went from about 11% in December of 2011, growing slightly to 14% in December of 2015. So one last item we've studied is how New Hampshire compares to the nation in terms of premium levels. This chart shows New Hampshire's average premium in the individual market, which is shown in red, compared to other states based on information from CMS's risk adjustment report in 2015. So as shown here, New Hampshire's 2015 premium ranked 18th highest in the country in this individual market, which is lower. It's come down from where they ranked in 2014, where New Hampshire was the 10th highest. And not shown here, but we saw something similar in the small group market, where New Hampshire ranked 10th highest in 2015, which is also lower than where it was in 14, where they were the 4th highest. Now, just to note, these amounts are not benefit or risk adjusted. Now, another point of comparison is if you were to just compare the second lowest costing silver plans across the country, and there we also saw New Hampshire falling as it compares to other states. So in 2014, New Hampshire ranked as the 17th highest, second lowest costing silver, and that's come down significantly, where in 2016, they're now the 18th lowest. So to wrap up, here are just some future considerations for New Hampshire going forward. So insurer participants on the exchange continue to change into 2016 and 2017. So some of the membership movement we saw among insurers, the products, the networks, some of those shifts are going to continue to occur into 2016 and 17 as members and consumers continue to shop for what they perceive as the best value for the best price. The introduction of the New Hampshire Premium Assistance Program in 2016 to the individual market risk pool will also impact premiums and claims in 2016 and beyond. And while the group markets in particular have experienced fairly low premium and claims trends, we'll still need to monitor them closely as there are indications of increasing trends in certain categories, especially pharmacy. So the full preliminary annual hearing report is available on the NHID's website, and it has more context and more information about all of these topics. So, and I just wanted to end by thanking the NHID staff for all your assistance, to all the insurers for providing all the data that goes into the report, and other stakeholders. And now, at this point, we're going to open up to questions from the audience about the presentation. So I think if you have a question, you can just raise your hand, and you can just speak up from your seat. Yep.
You referenced a list of 50 drugs that were the most expensive. Is there any access to that list anywhere? I know that it wasn't in the report.
I think we could. We probably didn't put it in the report, but I think we could easily add it to the appendix. Sure. Okay. Yeah, because we will. There will be a final report, as the commissioner said, released in December. So that's definitely something we could add.
Perfect. Thank you.
Yeah.
Hi. In the early part of the presentation, you stated pharmacy costs are up 8.7%, 15 versus 14. Then later you stated pharmacy pricing is up 18%, 15 versus 14. Can you explain the difference in those two?
I think you're looking at this. Yeah, so the 8.7% is based on what actually happened, versus this number is when, at the time, the insurers had to project costs. This is what they estimated, which is what they were projecting. So the difference is really between what actually happened and what was projected at the time. And then I guess I would just add, pricing trends do include other things that are not included in the actual trends. There's certain things that are included in pricing trends that are not included in actuals. So it's really, it's a difference of timing. So I think the point of this slide was just to show not only are actual pharmacy trends increasing, but also what insurers are projecting into the future is increasing.
Right, so their projection of 18 turned out to only be 8.7.
That's partially true, but I guess I would just, without spending a lot of time going into the technicalities, there's also, this assumes there's no benefit changes. This includes things like leveraging. So there's certain things that are in the pricing trends that are not in the actual trends. So I guess I would just say, again, I think the point of us showing this was to show not only has actual costs come in higher, when you start to look out into the future, it's still continuing to go up.
Assuming that's accurate.
These are projections.
Right, okay.
Yeah.
So does the 8.7% include rebates?
Yes, the information as far as we collected should also include any impact of rebates.
Just a clarification
Yeah.
on that, or actually a question. I think on the prior slide, you had said that the other costs, this is based on the actual data, did include some provider-administered drugs. So if you go back one more,
Oh, this one?
yeah, would that have impacted the trend projections, or is that separate?
It depends on how maybe a insurer defines what they actually include in pharmacy. Usually when you hear pharmacy, it does probably just include those that are prescription drugs administered versus the medical side of gets put into another bucket, but it could possibly. Yeah.
I'm very very complicated for me, but I was hoping you could break this down to a market dynamic. When the ACA took effect, my generic cholesterol medication with the same carrier, I didn't change carrier, same carrier, tripled in price for me as a health savings account user. In other words, I had to pay triple the dollars out of my pocket because their quote-unquote discount rate went from roughly $13 a month to, and in fact I was buying 3 months supply for roughly, I think it was roughly $75. I take that back, $27, and they were now going to charge me $27 for a 1-month supply under the new discount, and I couldn't get a 3-month supply anymore, so they restricted that. I then found this application called Convenient MD. I'm sorry, Convenient RX. Good RX, thank you. So many MDs and RXs around here. You can see I am a feeble brain. Good RX, where I could put that drug in there, and lo and behold, it would give me a discount that put it right back where it was prior to the ACA. And I've shown that to many people, my wife, others around me, and they've experienced exactly the same result. So my question is really twofold. One is, what's the market dynamic, or is there kickbacks, is there rebating, is there graft? I mean, what's going on there? Because there's something really very, very confusing. And as concerned citizen, I recognize that if I hadn't gone and figured out to use this good RX and get my price back down, that would have all been calculated in the medical loss ratio for my type of group, and that would have driven the insurance premiums up for the entire, everybody in the state. So could you try to break it down a little and explain that?
I guess I would say, I think these are all excellent questions, and I think, though, they're probably better suited to the panelists that are coming up, because I think these are exactly some of the topics that I think a lot of people are interested in, and I think we'll have the right experts up here to really go into the details on that.
Okay, thank you.
First of all, this is an excellent presentation, and lots of really helpful new data. So the question I have, and maybe more of a suggestion, gets to Jenny's question from the department around medical drugs, which I think you indicated fall under the other, but presumably are mixed in with some others in that. What I think would be helpful to get an overall picture of the pharmacy spend is to pull that medical benefit pharmacy cost out of other, combine it with the pharmacy that's under the pharmacy benefit as we understand it, which I think is really representative of the overall impact of pharmacy pricing, because the dynamics that are happening in industry today are fairly consistent across those two categories of drugs. So I work for a health plan, and when we combine both together, it leads to a much larger number, where I think people are traditionally thinking prescription drugs are anywhere in the kind of 10 to 15% range of overall medical spend. If you include in medical drugs, it's much closer to like 25%. And that is really the number that should be driving our conversations in the policy and the marketplace arena.
Yeah, I think that's an excellent point. We did consider trying to do this. It's a little hard sometimes to always, because every insurer might look at it a little bit differently and to define them, but I agree. I think that's exactly the direction we'd like to go. And I think, and the numbers you're quoting are very consistent with what we've heard also, as far as when you do, if you were to, in New Hampshire, for instance, 19% of costs are just due to prescriptions through the pharmacy benefit, and we've heard anywhere from an additional 5 to 10% are due to drugs that are coming through the medical side. So I think your point is very well taken, and something we'll try to work on and do a better job of defining those and pulling those out in the future. Yeah.
I was struck by your comment that about a third of the people on the individual market aren't getting any subsidy at all, which, if I recall, that's pretty different than what we're seeing nationally. Most of the country, it seems like it's only 15%, maybe 20% are unsubsidized. Is that, do you think, because of the competitiveness of this market, and is that also, do you think, part of what may be contributing to what appears to be a reasonably stable risk pool here?
Yeah, that's I've seen that same statistic, and it did strike me why New Hampshire seems to have a much higher percentage not getting subsidies. I guess I don't have a good answer why that is. Is it because it's grown so much? Is it education? Is it I don't know. Do you want to comment?
Just quickly, Jennifer Patterson from the Insurance Department. I think that one thing that may play into that is the New Hampshire Health Protection Program in 2015, which is the year that all of this information.
Jennifer, can you
relates-
speak up a little bit?
Yeah, is there a microphone? I don't know.
We don't.
Yes. So in 2015, which is the year that this data is from, the New Hampshire Health Protection Program was in effect, but it wasn't through coverage through our individual markets. Instead, it was through MCOs. So that takes away that 100 to 138% population, because that population was covered in 2015, but through our Bridge to Premium Assistance Program. So that may be part of an explanation of why the numbers are less than in other states, because they're not part of our market. Whereas if we had not had the Medicaid expansion, the folks in that income bracket would have been eligible for subsidies on the exchange.
Could it, I'm just hypothesizing, could it have anything to do with higher than average median incomes in New Hampshire and people that might be buying plans off the exchange just being in generally better financial positions than people,
Buying on the exchange?
yeah, in other states or markets?
Perhaps, yep, even though, yeah, right, even though I think the premiums compared to other states are coming down, you're right. I mean, I think that's clearly New Hampshire still has one of the highest median incomes in the whole country, so, yep.
Sorry, I can't help but comment on
Yes.
Minuteman Health. So the risk adjustment program,
Yes.
just like to underscore our perspective is that it doesn't actually transfer risk based on the relative health of a population. First, it is transferring money based on how that population is scored, and there's been a lot of research showing that the scoring and the actual cost associated with the populations are different. And secondly, the payment moves based on the market average premium. So our plan is scored as being healthier than we really are, and then after being scored healthier than we really are, we transfer money based on the market average premium, which is much higher than ours because we are that narrow network.
Yep.
So just to
Yes,
Note-
I hear your,
note for the
thank you
record.
for that, yep,
Sure.
added comment, thank you. Okay, so I think at this point, we're gonna move on to the public comment period, so our commissioner's gonna come back up.
Thank you very much, Jen. That was a really, really good presentation, extremely informative. And before we get into public comment, because as I mentioned earlier, this is a public hearing, and Tom, thanks for giving us the first public comment.
Sorry, jump the gun.
Let me introduce one staff member that I missed because she wasn't sitting right in front of me. That's Sandra Barlow, who's my administrative assistant, and shame on me for not including her in the introductions earlier. With that, let me open it up to public comment before we go to the break. So does anyone have a public comment, especially as it relates to the presentation that Jen just gave, keeping in mind that we've got 3 panels that are going to provide very pertinent information regarding to drugs and the pricing and all of that sort of thing as we move on into the day. Seeing none, I think we break a little bit early.